All right, I think we can start now. Can you all hear me? Can you still hear me?
Yes, sir.
All right.
Can you?
So confirm if you can see my screen. Can you see my screen?
Yes, you can see.
Okay. So let's start. In the class, we have already started a discussion on capital allowance. I think we stopped somewhere. But by way of a recap, I'll start by saying capital allowance is just is a relief that is granted in lieu of depreciation. Like we said in tax, depreciation is not allowed. Why? Because depreciation is based on estimates, and the method of calculation of depreciation is not uniform. You and I know that when you come to calculation of depreciation, there are different methods. You can use straight line method, you can use reducing balance method, and so on and so forth. And all these methods will give different results. So if that is the case, then it's not uniform to all taxpayers. So because of those two reasons, in tax, depreciation is not allowed. So in place of depreciation, the tax authority prefer to grant what is known as capital allowance to the taxpayer. So capital allowance is given in lieu of depreciation. Okay, so instead of the depreciation, you'll be allowed to claim a capital allowance. So that is the meaning. We also talk about the types of capital allowance. We have looked at what is known as initial allowance. We have also looked at annual allowance. We have explained investment allowance. And of course, rural investment allowance. We have also looked at balancing allowance. So those that were in the class, can you confirm to me, have we done all this? Confirm to me if we have explained all this. Those that were in the class last week.
Yes, we have done it, sir.
Okay, can you tell me exactly where we stopped? So where exactly did we stop last week?
I think we stopped at we solved a question on Joe Boy Limited, page 55.
Okay, for balancing allowance.
Yes, you did balancing adjustment, then you explain balancing charge and balancing allowance. So you now took an illustration.
Okay.
Boy Limited. That's where we stop.
Okay, all right. So this is exactly where we stopped. So for those that are just joining us, we have types of capital allowance. We have initial allowance, which we said is claimable once throughout the tax life of an asset. And you are not to prorate it. So not to be prorated. You claim it in full, irrespective of the number of months in the basis period. Okay? And it's the first allowance you compute before the annual allowance. Okay, so that's the initial allowance. And we said, how do we compute it? It's just the rate. The rate, which is the rate fees by government for initial allowance. All the assets have their own rates. So the rates of initial allowance times the cost of the asset, that's how to compute it. Then for annual allowance, we said is claimable annually throughout the tax life of an asset. So it's not once, it's annually. Meaning if an asset's tax life is 10 years, annual allowance will be claimed 10 times. That's what it means. And for annual allowance, you must prorate. You must prorate it. So if the number of months you are working for is 5 months, then you have to pick 5/12. If it is 3 months, then in line with the number of months in the business period. Then for investment allowance, we said this one is a special kind of allowance for not all the assets. It's for plants, machineries, and equipment. So not all the assets. So investment allowance is on PME, plant, machineries, and equipment, not all the assets. While initial allowance is for all assets. Okay. And we say investment allowance is the rate is 10% for investment allowance, 10%. Okay, for plants, machinery, equipment, and generator is part of plants. So okay, and also you claim it once, just like initial allowance, and you don't need to prorate it. So once you are claiming once, you don't need to prorate. And I said the Finance Act of 2023 deleted investment allowance, so it has been removed by Finance Act 2023. But nevertheless, you may still be required to compute. So you look at the years you are given. The question you are given in exam, what is the year you are given? So if you are given question and the year is let's say up to August 2023, then you have to compute. But if it is after August 2023, up to August 2023, you have to compute. Yes. After August 2023, you don't need to compute. We'll see how all that will be done. Then we also have rural investment allowance. We say this one is for those businesses that are situated in rural areas where there is no electricity, no water, no tarred road, no tarred road. So if the business is situated in this area, we say it's situated in rural area. But that the business is situated in a rural area where there is no electricity, water, and tarred road is not enough. Okay. For the business to be entitled to this investment allowance, the business must have invested in these facilities that are not available. So it means that if a business is situated in a rural area where there is no electricity, for instance, the business must have invested in the electricity, must have brought electricity before it can claim that rural investment allowance. So the business must have made rural investment before it can claim it. So it's not enough to say, okay, I'm situated in rural area, that means I have investment allowance. No, you must have invested in those facilities that are not available. And if the facilities are available, but they are 20 kilometers away, you can also benefit. And in the same, just like we explained the investment allowance, the rural investment allowance also have been deleted. So the two of them have been deleted by Finance Act, the same Finance Act 2023. So the same set of rules apply for the two of them. Okay. Now, for balancing allowance, we say this one goes to balancing allowance. But before you understand balancing allowance, that you need to understand what we mean by balancing adjustments. Okay. So adjustments. And balancing adjustment is just the adjustment you must do whenever there is a disposal asset. Whenever you dispose an asset, the adjustments you must do, you are required to do, is what is we mean by balancing adjustments. So in doing that adjustment, you are trying to find out whether there will be balancing charge, whether that disposal will result to a charge, or whether there will be a balancing allowance, whether that disposal will give you additional allowance. That's just what that's the sense of balancing adjustments. And we say if it is a charge, it means it's taxable. So how do we do this balancing adjustment? You compare sales proceed and tax written down value. That's how you do it. You compare sales proceeds of the assets and the tax written down value. So the difference will be either a charge if it's positive or an allowance if it is negative. So that's how you do it. For instance, if I compare the sales proceeds is the amount you realize when you dispose an asset. If I sold an asset 100, I dispose an asset 100, but that asset, the tax written down value as at the time I dispose it, not cost, the tax written down value. The value in the eye of the tax authority as at the time I dispose it is 80. So when I take this away, you see I've made something that look like gain of 20. This is what we mean by balancing charge. So if the sales proceed is greater than tax written down value, then it's a charge. It's a balancing charge. It means I have made something that look like gain. So that's a charge. Now, if my sales proceed is, let's say, 90, and my cost, or tax written down value rather, my tax written down value is 110 or let me use 120. So I have made something that look like loss of how much? 30. This is what we mean by balancing allowance. So in this regard, you see that the sales proceed is less than the tax written down value. So once the sales proceed is less than tax written down value, is a charge. Once the sales proceed is more than tax written down value, once the sales proceed is more than tax written down value, is a charge. Once it's less than, is an allowance. So that's what the balancing adjustment you do. So this adjustment is usually done, like I said, whenever you dispose an asset. So if you have been using asset to do business, you have been claiming capital allowance on that asset. Whenever you sell that asset, you have been claiming capital allowance on, know that you have something to do. You must do balancing adjustments to know whether it will result to a charge or allowance. So if it's a charge, what's the implication? Balancing charge is taxable. You are going to pay additional tax because you have made some profit. So you are going to pay additional tax. It's taxable. Okay. So how do you tax it? You add it to your assessable profit. Add to your assessable profit so that you tax it together. Okay. So when you do the balancing adjustment, compare your sales and tax. If it is a charge, then know that you have additional tax to pay. So you quickly go and add it to your assessable profit so that they will be taxed together. Then if it's allowance, know that you have a relief. Okay, it's a relief. And remember, when you say anything is a relief in tax, it means use it to reduce your profit. So how do you claim this relief? You add it to capital allowance. So balancing allowance goes with capital allowance. You add it and claim the two. So that's why we say balancing allowance is part of capital allowance. That's why we say it's part of it. Okay, because it's a relief. It goes to with capital allowance. Okay, so that's it. Please confirm to me if you are hearing me and if it's very clear.
Sorry, I can't see your screen. I can't. It's blank for me.
Others, is this the same situation?
No, I think it's your network.
You're
We
not
are seeing the screen.
the screen,
Listen to you.
the screen is clear. But you
Maybe
need to
So
zoom
it
it.
should be your network then.
your network.
Check your network. It should be your network. Okay, so is
Okay,
it clear?
let
Is it
me
clear
let
to
me.
everyone?
Yeah, the screen. You may need to zoom it a little. It's okay, sir. You may need to zoom it a little so that the font size can be more visible.
Is it on my own end? Are you referring to me?
Yes, sir. So could you please zoom it?
Okay, let me see.
Yes, sir.
Let me see. I think this is the highest I can get here. This is the highest. It's highest.
I think he's okay. We can see it.
It's all right. We too, we can zoom it. We can zoom it from our hand too here.
Okay. So zoom it from your end. I think that's the best thing. All right. So if it is clear, then that is just. I just summarize what we did where we stopped the last time. So we are taking it up from here now. Having done what the types of capital allowance we have and also balancing adjustments and how to do that. These are even the last illustration we did. This is just exactly what we demonstrated. So they are all on the material. So now, having gotten this, the next thing we look at now is second-hand acquisition of assets. Second-hand acquisition of assets. Second-hand acquisition of assets. So when do you say an asset is acquired second-hand, or what is the tax implication of assets acquired second-hand? Now, what we mean by second-hand here means that you acquired an asset on which the previous owner had used for business before. So the previous owner had put it for use in business and have claimed some capital allowance, especially initial allowance. You know, you cannot claim capital allowance if you don't put assets for use in business. You don't use assets in business. Okay. So if you acquire an asset from a person or from a company that have used that asset for business before and have claimed some allowance on that asset, then we say you have acquired second-hand assets. Okay. But if the person have not put these assets for use in business before, then it's not second-hand, it's brand new. So this time around, the second-hand acquisition here does not mean that somebody have used the asset before. No. What we're looking at, the previous owner, have he claimed some allowance on the asset before he disposes it to you? If yes, then that's second-hand. Okay. So now, the tax law singled out building from other assets. Building. Now, if building is acquired second-hand, and if other assets are acquired second-hand, what are the tax implications? That's what we're looking at. Please confirm to me if you can still see the board. Can you see the board?
Yes, sir.
We can see it.
Yes, you can see.
Is it better now than before?
Yes.
Or is it the same thing? Okay.
It's clear.
So, okay. So, if building is acquired second-hand, that means you have acquired building from a company or from someone that have used that building for business before and claimed some allowance. So, if building is acquired second-hand, what is the tax implication? We say number one, there will be no claim of initial allowance. So if you acquire an asset second-hand, you will not be allowed to claim initial allowance because the original owner must have claimed. So you cannot claim again. Okay, that's the number one tax implication. Two, you can claim annual allowance, but based on lower of original cost and purchase price. Okay, so the lower of original cost and purchase price. So the lower of the two, that's what you use. Which cost am I going to use? I'm going to use the lower of the original cost and purchase price. That means if an asset is acquired second-hand, a building is acquired second-hand from an original owner. So this is an original owner, for instance. This is me. This original owner constructed this building for 300 million. And I bought it from him. I bought it from him after some years for, let's say, 400 million. You know, building appreciates. Now, this is second hand because this original owner have used this asset for business, have claimed some allowance on it. Now, in my own tax computation, having bought this building 400 million second hand from this original owner, what is the tax implication? I said, number one, I will not be allowed to claim initial allowance. Two, I will be allowed to claim annual allowance. But which of these costs will I use? Am I going to use the amount I bought it from him, that is the purchase price, or will I use the original cost, the cost at which the original owner bought it or constructed it? And we said that I'm going to use the lower of the two. So in this case, which one is lower? 300 is the lower. So I'm going to use this for my annual allowance computation, not the price I bought it from the original owner. I hope it's clear. Is it clear? Okay. So now, two, what of other assets? If other assets are acquired second hand, what is the tax implication? Now, for other assets, I will be allowed to claim both initial allowance and annual allowance. So one is claim initial allowance. Two, claim annual allowance. Unless, the only time I will not be allowed to claim annual allowance or initial allowance, let me put it down, unless the transactions were not done at arm's length. So if I acquire other assets secondhand, notwithstanding that the previous owner have claimed some years, the tax law say I can still claim the initial allowance and annual allowance. But the only situation whereby I will not be allowed to claim initial allowance is if the transaction was not done at arm's length. That means I have sold to my related party, someone I know, and I didn't sell it at arm's length price. So if that is the case, I may not be allowed to claim initial allowance. So this is the tax implication of second-hand acquisition of assets. So you see that the tax law singled out building from other assets. So building has special treatment from other assets. I hope it's clear. Confirm to me that if it's clear, so that we'll go on.
Yes, sir. Please go ahead, sir.
Okay. So now let's go to the computation side now. Computation of capital allowance. How do we compute capital allowance? There's something must do whenever we are asked to compute capital allowance. And that is, we first allocate the assets. We use what is known as basis period, using basis period for capital allowance. So when you are asked to compute capital allowance, know that there's something you must first do. And that thing is that you must first allocate those assets using basis period for capital allowance. Now, the allocation here entails that you place those assets in their correct tax years. Put them in their right tax years. So if you make mistake of allocation, if you put an asset that's supposed to be in 2024, you put it in 2021, then your computation will be wrong. So you must learn how to place them in their correct tax year. That's what I mean by allocation. And what will help you to place them in the correct tax year is the basis period for capital allowance. That's what you for that allocation. Okay, so this is the first thing you must do whenever you are asked to compute capital allowance. And note that no examiner will not ask you to allocate the assets. No examiner will tell you to allocate the assets. Okay, but you must know that this is what you must first do. You must know this is the first thing you must do. Can you hear me?
Yes, sir.
Okay, so you must first allocate assets using basis period for capital allowance. Now, having done that, okay, another thing we also have to understand is what are the assets to be allocated? So we say assets to be allocated. What are the assets we need to allocate? One, we need to allocate new assets. Two, we need to allocate old assets. And three, we need to allocate disposed assets. So these are the three categories of assets we need to allocate. And these are the three categories of asset manner your question will come. So it's either in your question, they give you new assets, old asset, or disposal, or they may give you new asset and old asset, or new asset and disposed asset. So that's how it will be around these three categories. But know that you need to allocate them. Now, why do I need to allocate new assets? Okay, first of all, can you tell me what new assets are? What do you understand by new assets?
Yeah, new asset is an asset purchased during the new year or during the year.
During the
New
year?
asset.
Okay.
New
Yeah,
assets
someone
are
else is
assets.
saying so. Go ahead.
They are assets whose
Go ahead.
initial allowance have not been claimed.
Okay. Any other person? So you're right. New asset means that initial allowance have not been claimed on that asset before. This is the first time we're going to claim. That's what made it new. So it's not because we bought it today. Do you understand? It doesn't have to do with the date of acquisition. So the question is, have initial allowance been claimed on the assets? If yes, then it's not a new asset. Have the initial allowance been claimed on the assets? If no, then it's a new asset. So it means that it's possible I bought an asset 10 years ago and I'm not claiming allowance. So if I put the asset to use in business today, that asset is still a new asset because no initial allowance have been claimed on that asset because I've not used it for business. Remember, I told you, you can only claim capital allowance on assets when you put it to use in business. Okay, so new asset means no form of allowance have been claimed on the assets. What of old asset? Old asset now means that some sort of allowance have been claimed. That means we have claimed some sort of allowance. That's what makes it an old assets. So if I have claimed, even if it is 1 year I've claimed, it's automatically an old assets. Okay. All right. So now, why must I allocate new assets? I need to allocate new assets in order to determine the first tax year. The first tax year to claim initial allowance. So I want to know the first tax year to start claiming my capital allowance. That's what it means. Because this is the first time I've not claimed before. I want to know what should be my first tax year. Is this 2024 going to be my first tax year, or is this supposed to be 2023? So I want to know the starting point, the first tax year. Because if you miss it, if you go and compute for a year that is not what it's supposed to be, then your computation will. So when you allocate new assets, you want to know the starting point, the year you ought to start for the claim of capital allowance. Then old assets. Why do I need to allocate old assets? You need to allocate old assets in order to determine the number of years that have been claimed, to determine the number of years capital allowance have been claimed. You know that if an old asset, if you want to claim capital allowance on old asset, you cannot claim initial allowance because it's old. You know, initial allowance is claimable once. So the only allowance you can claim is annual allowance. And in claiming annual allowance for old assets, you use this formula: tax written down value over n minus x. Okay, that's what you ought to use for old assets. Okay, so now the examiner will always give you tax written down value. So once you see tax written down value in your question, know that that asset is automatic, is an old asset. That's the signal. If you don't see tax written down value, it's not an old asset. Even if you are told it was bought 20 years ago, once they didn't give you tax written down value, know that it's not an old asset. But once you see tax written down value, it's an old asset, irrespective of when it was acquired. Okay, so that's the signal. So they will always give you tax written down value if it's an old asset. And I've already told you the last time how to get N. N is the tax life, the number of years. How do we get that? You just say N equal to 100 divided by annual allowance rate. So if you divide the annual allowance rate of the assets, if you divide 100 by the annual allowance rate of the asset, you get the tax life. So this one, you don't need them to give you N. You know how to get it already. Like N for building is 10 years. You know that. 100 divided by 10. N for plants and machineries is 4 years. Because their annual allowance rate is 2,500 divided by 25. 4. N for furniture is 5 years. Because the annual allowance rate for furniture is 20%. Okay, so just divide 100 by annual allowance rate, that gives you the N. So this one, you know how to get it. Tax written down value will be given. But the problem is this X, which is the number of years that have been claimed, may not be given to you. So you need to find it yourself. So how do you find it? When you allocate the old asset, you find X. That's the sense of allocating old assets. You know, if an asset is old, it means they have claimed annual allowance for some years. It could be 1 year, it could be 2 years. So and if you want to claim annual allowance for the current year, then you are continuing from where they stopped before. That's the nature of annual allowance. Okay, so for you to continue from where they stopped, then you need to know how many years they have claimed so that you take it away from the total tax life. That's what happens here. So that if the tax life, let's say, is building is 10 years, and you have discovered that, okay, they have claimed X, they have claimed 3 years, that means the remaining 7 years. So it means the tax written down value will now be divided by the 7 years, because this tax written down value is for the remaining years. So that's the sense of finding X, and that is the sense of allocating old asset to find X. I'll show you as we go on. Then dispose assets means you have sold the assets. You have disposed it. You have sold it. The asset is no longer in your premises. It have moved to another company, or another person have taken possession of the assets. It's no longer for this business. So if an asset is no longer in your premises, if you have sold an asset, the asset don't have any business being in your book. So you should write it off from your book so that it will appear in the book of the new owner. So when asset is disposed, there are two things you do. You write off. You write off, remove it from your book. And two, you do balancing adjustment, which I have told you earlier, to know whether there will be balancing charge or allowance. So if an asset has been disposed, you write off the assets and you do balancing adjustment. So how do we now know when to write off? Which year are we going to remove that asset in our book? Let's say we sold an asset today. Which year am I supposed to remove that asset from my book? Should I remove it this same year, 2024? Or should I remove it next year, 2025? Or should I remove it 2026? You see, you may not know when to write it off. So if you say, okay, let me write it off this year because I sold it this year, it may not be correct. So you need to know the right year to write it off. And that is what the reason for allocating this disposal asset. So when you allocate disposal asset, it helps you to discover the appropriate year to write it off to avoid mistakes. So that's the essence of allocating disposal assets. So I have explained the essence of allocating both the new, old, and disposal assets. Okay, you see how important allocation of assets is. Is it clear?
Yes, sir. It's clear.
Yes, sir.
Okay, do you have any question before we go on?
I think someone is raising hand.
Okay. So if you're raising hand, please go ahead, ask your question.
Umar, you are raising your hand.
Yes, sir. I just want to ask, is this class being recorded? Because I think my network is very bad. I hardly hear you. It keeps breaking.
No problem.
Maybe you should just log out and come in again.
I'm coming.
I've done that severally.
Which
I've done
network
that
are you using?
severally. I haven't changed network. It's still same thing. Maybe it's
Maybe your area there is no problem. I'm recording it. Can you hear me?
Yes, sir.
We can hear you.
Hello?
Okay.
I use
So any other
MTN
question?
and Glo.
Okay. Maybe you try Airtel.
Okay, that should be another day. I don't have Airtel line actually.
Okay.
Blue is even better too.
Okay. All right. Any other question on what we have done so far?
Yes, sir.
Sorry, sir. Okay. Go
I have
ahead.
question. Oh, all right. Thank you.
Go ahead.
My question is that this investment allowance and other allowance, what was it called? Rural investment allowance. So does that mean that it's not practicable again? And that's one. Two, any questions set, that means that there won't be any questions related to investment allowance and the rural investment allowance. Sir. Thank you, sir.
Okay. By Finance Act 2023, which I told you that it has been deleted, both the rural investment and investment allowance. And that Finance Act 2023 takes effect from 1st September 2023. Okay, so, but you know, this is exam. For example, purpose, the examiner may just ask you question, date it years before this Finance Act 2023. So that is why I said earlier, any question you have up to August 2023, then you have to do investment allowance. But if it is after August, that means from 1st September 2023, you don't need to do that. So the examiner actually, they are testing it. And if you look at even they normally attach those formula, those rates in your question. So if you look at, check behind, you also see it stated there that don't compute if it is up to August 2023, but after September, compute it up to August 2023, but after September, don't compute. It's stated there. So you'll be guided by that as well. So you look at the question, look at the years you are given. That's what it means.
Okay, thank you, sir.
Yes.
Thank you, sir.
Yeah. Any other question?
I have a question, sir.
All right.
Yes, still on that same rural investment and the second one that was deleted. Please, are you going to teach us how to compute them in case question might come just like
yes, I'll show you how to compute them.
Okay.
Yes, right. I'll show you. In fact, the question we are going to solve, sir, we need to compute. Yes, I'll show you.
Okay, sir. All right, sir.
Any other question? Okay. If there's no question, then we have gotten all what we need to start computation of capital allowance. So we'll go to our materials. You have the material, so open to capital allowance. I've also sent the material on the platform in case you don't, for those that don't have the material yet. So I sent capital allowance already there. So also check to see. So let's go to the question to illustrate this. Okay, can we see the board? Can you see it on the screen? The question.
Yes, sir.
Yes, sir, we can see.
Okay, so let's read the question, then we look at it. We have two illustrations to do on this. Okay, please try to understand the two illustrations. Now, the first one is on Celtic Superior Service Limited. Commenced business on 1st of May 2019 and keeps record up to 31st of March every year. The details of assets used by the company in its operation as follows. The assets are for generator, motor vehicle, furniture, and building. The date of acquisition is given for all the assets and also the costs of acquisition given. The figures are in thousands. We are also told that the company disposed its assets as follows. 2 assets were disposed. That means out of these 4, they subsequently disposed 2. And the assets disposed are generator and furniture. The date of disposal are given. The sales proceed, that's the amount realized from that disposal, is given. And also the cost of that assets disposed is given. We are also told that the building, that means this building that was acquired, the building was acquired second-hand. So it was second-hand acquisition of building. So you know what second-hand means? From a company that originally constructed the building for 2.5 billion. Then the requirement says you are required to compute capital allowance claimable up to 2025 tax year. So as you can see, it's a very straightforward question. Did you understand the question?
Yes, sir.
Okay, so what do you think? How are we going to approach this question? What do you think we are going to do?
I think we need to allocate the asset.
Yes, using what?
Basis period.
Basis period.
But which of the basis period?
The first one.
Capital allowance.
Which one is the first one? Which of the basis period?
Date of acquisition, like the cost of acquisition.
You know, there are 2 basis periods now. We have basis period for assessment. We have basis period for...
Based on commencement.
Which one are we using to allocate the assets?
Basic period for capital allowance.
Yes, that's what you use. The basis period for capital allowance, not the basis period for assessment. Okay, so basis period for capital allowance is what we use in allocation. While basis period for assessment is what we use when we are computing the tax liability. So if you want to allocate, you use that of capital allowance, although they may be the same. All right. So now, if we're able to allocate the assets, what else are we going to do? What else do you think we are going to do after the allocation?
We identify which assets that are new, one that old assets, and disposed assets.
All right. That's good. So in this question now, before we start computing, what are the categories of assets we are given? Were we given new assets, old assets, disposed assets? Which ones were we given?
We are given the both new assets, old assets, and disposed assets.
So which one is the new asset? Which one is the new assets?
The generator,
Can you hear me?
Generator, motor vehicle,
generator
furniture, and
that
Generator
was
is a new asset.
acquired on the 1st of January 2019, the new asset.
Okay. All those set of our generator, motor vehicle, furniture, and building, right?
Yes.
sir.
Now, which one is the old asset?
building,
The one acquired, the building acquired.
building,
The second,
Which of the building? Which of the building acquired?
the
Second.
second hand
Second.
house,
Ah,
acquired for
How many
2.5.
building how many building do you have in this question?
2,
2,
No,
It's one. It's one now.
1.
it's one building, and you have told me that that building is a new asset. This second information is telling you more about that building, that it was acquired second hand when it was acquired.
Yes.
Do you understand? So if you say it's an old asset, then it's not a new asset. Do you understand it?
Yes.
So that the building was acquired second hand is just an additional information given to you about that building. So that building is a new asset. So which one is an old asset here?
As far as I'm concerned, since it's from the question, they say the business commenced on the 1st of May 2019. If I get correctly, the asset that is acquired during that period should be the new ones. Then the ones after that one. Okay, the generator should be the old asset. Sorry. Since it was
Generator.
acquired before
And
the date of commencement.
The generator should be the new now.
I don't
The
know.
only hold,
Might be
sir,
wrong.
the only hold there is building, sir. For the fact
the
that
only
the
old is
additional for the fact that additional information has been given as regards to the building. Building was acquired second hand.
okay.
That's my own observation, sir.
So you are saying that there is an old asset, and that is that building. Okay. I told you something about old assets, new assets, disposed assets. When do you say an asset is old? And when do you say an asset is new?
It's
Yes,
old
sir.
when it has already been put to use.
When you have claimed some sort of capital allowance.
Yes,
Yes.
initial allowance.
Is it not?
Yes,
Yes.
sir.
And I also told you something, that there is something you must see before you say it's an old asset. What is that thing?
Tax written down value.
That value.
You must see tax written down value. If you are not giving tax written down value, it's not an old asset.
Oh, okay.
So were you giving the tax written down value for building?
No, sir.
No.
No.
No, it's not an old asset. If it's an old asset, they will put tax written down value there.
Okay.
So please take note of that. If you don't see tax written down value, don't say an asset is old.
All right, sir.
And I've told you it doesn't have to do with the year of acquisition. Okay.
Okay.
So you have to see tax written down value before you say either it's old or not.
Okay, sir.
Sorry, sir.
Yeah.
Okay, what if there is no tax written down value, but there is an additional information that states that initial allowance has been claimed on a particular asset?
Initial allowance
Does that
have
mean
been claimed.
on a
That means
particular
they would
asset? Yes.
that means they would tell you the initial allowance, tell you the annual allowance have been claimed.
Okay, that means
Do you understand? If they can't just say initial allowance have been claimed, they will tell you the amount now. So that you now, because if once it's an older asset, you are continuing from where they stopped. You must know the ones they have claimed before, so that you know when to start.
Okay.
So the best way to set old asset is by giving you the tax written down value, telling you that this is the tax remaining tax life, or this is the value of the asset for tax purpose now, so that you continue from there.
Okay, sir.
Okay, so take note of that. So what are the categories of assets we have now?
New and disposed assets.
New and disposed. So these are the things you identify first. So we have in this question, we have new and disposed. The examiner is testing new and disposed. So you must know how to compute for new assets and also how to treat disposed assets. That's the lesson you have to learn here. Now, having gotten this, so we start our computation now. So let's go to the board. Please, I hope everybody have this material, because I may not be coming back to it all the time. So just I will be asking you questions on this. You'll be giving me, then we'll go on. All right, so let's go to the board. Okay, what's the name of the business?
Celtic Superior Services Limited.
Okay, Celtic Superior
Yes, sir.
Service.
Superior Services.
So we said the first thing we must do, you see, the terminal does not say allocate the asset, but you should know that's the first thing you do. We start with workings. We say 1, determination of basis period for capital allowance and assets allocation. So we use it to allocate the assets. That's the first thing we must do. The examiner will tell you to do this. So we have 4 columns.
I can't see your board.
In doing this. The tax years. You can't see it. Others can you see
I
it?
think it's your network.
Yes, I can't see the board, sir.
Yes, sir. It's your network, please.
Yes, I can see.
Can anybody see it?
Yes, sir.
It's your network.
If others can see it, then it's your network. Okay, so we have these 4 columns. Now, this is what we are looking for. We're looking for basis period for capital allowance so that we can allocate the assets. But this basis period of capital allowance is derived from basis period of assessment. So you must go start of assessment so you can derive it from there. Now, this basis period of assessment, how do we get it? It depends on whether the question is commencement question, whether it's cessation question, change of accounting date, or ongoing business. So check the question. Tell me, is it commencement, cessation, change of date, or ongoing business?
Commencement.
Commencement.
If it's commencement,
Commencement, sir.
if it is commencement, you are going to use what? Commencement rule to get it. Is it clear?
Yes, sir.
Yes, sir.
So when did the business commence?
First of
When
May
did
First,
2019. 1st of May.
stop.
the business commence?
First of
So
May
what profit
2019.
what profit will be taxed? What profit will be taxed in the first year of commencement? Profit from when to when?
First
Profit
May
from
May
when to when?
2019.
So 31st
30
March
From the date of
2020.
commencement to when?
1st March 2020.
To the end of the first accounting year.
End of
From
the
the
first
date of
accounting
commencement to
year.
end, year end. Okay, so you apply that here.
Yes, sir.
Okay, so the business commenced 1st of May 2019, as you have said. What is their year end?
31st March annually.
So which March is the closest here? It's March of 2020.
2020. 2020. Yes, sir.
What will be the tax year?
2020, sir.
2021.
2021.
2021. The tax year for the new report is 2021.
Yes, sir.
Okay. Now, you see, this is for business that commenced from May 2019. Business that commenced in 2019. So you may have business that commenced
Yes.
before 2019. Okay. You know, that is the old commencement rule. I just want you to understand this new rule first. So I will not show you how to do those old ones. Because the examiner, although in practice, is purely this new one we're using. But the examiner may go back and set question for those years before the Finance Act. So you should also know how to do that. But just understand these ones for the Finance Act first. As you can see, this business commenced 2019. So any business that commenced from 2019 is the Finance Act you're using. Did you get that?
Yes, sir.
Are you hearing me?
Yes, sir.
Okay. So the second year, we say from the next day. The next day after the end of the first one, the next day is 1st of April 2020.
2020.
31st March
2021.
2021, right?
Yes, sir.
So what will be the tax year?
2022.
2022. So the third one will also be the next day. The next day is 1st of April 21 to March 22. So the tax year will be 2023. You know, these are the relevant tax year. Under commencements, we have 3 relevant tax year, but the examiner told us where to stop. Where did they ask us to stop?
2025. Tax year.
2025. So we need to extend it. The next day will be 1st April 22 to March 23. That's 2024 tax year. The remaining one, 1st of April 23 to March 24, 2025. This is where the examiner says we should stop. I hope this is very clear. Is it clear?
Yes, sir. For now.
Yes, sir.
Yes. Okay. So if it is commencement question and is the Finance Act, that means for business that commenced from 2019, as you can see here, then the basis period for capital allowance will be the same. Because the Finance Act have removed coincidence of period, gap in between period, overlapping period. So the basis period will be the same. That of assessment will be the same if it's commencement for a business that commenced from 2019. Take note of that. So now, if it's the same, it means what we have here is same thing here. So we can copy the same thing. Did you get that?
Yes, sir.
Is it clear?
Yes, sir.
Yes, sir.
Come again.
So I said, if the question is commencement question like this now, like this one now, know that the basis period of assessment will be the same as that of capital allowance. For a business that commenced in 2019, just like this one, it commenced in 2019. A business that commenced from 2019, rather. So if a business commenced 2019, 2020, 2021, going forward, know that it's Finance Act, new Finance Act you're using. That's all we have done here. Then if that is the case, the basis period of assessment will be the same as that of capital allowance because The beauty of finance, what the Finance Act has done is that it has removed overlapping period, coincident of period, gap in between period. So that's the reason why the basic rate of assessment will be the same with that of capital allowance. I hope it's clear.
Yes, sir.
Okay, so let's now allocate the assets. Now go to your material. Like I told you, I will not be going to the material. So go to that material, look at the new asset. You know, we identify the two categories of assets. We say we are giving rather new and disposed asset. That's what we're giving. So we'll start with the new one. So go to the new one. What's the first new asset?
Generator.
Generator.
So use the dates of acquisition. When was it acquired?
1st
January 2019.
Generator was acquired 1st of January 19. So
Yes, sir.
check where you have the date. Check where you have the date here. Where do you have this 1st of January 19?
We don't have it
It's
here.
not here. It's not in our basis period.
So where is it? Is it before, you know, the business commenced 1st of May 19? Is it before the business commenced or is it down?
Yes. It's before the business commenced.
So if an asset is acquired before the business commenced, the tax law says those assets are deemed to have been acquired on the first day of commencement. So they will be deemed to have been acquired on 1st of May 19.
Okay, sir.
Because a business can buy the asset on ground before they commence.
The commence business. Okay.
So how do you treat them? They are deemed to have been acquired on the first day of commencement.
In the first day of business. Okay.
Do you understand? So where would that asset fall now?
The first
2021.
2021.
Do you understand? Okay.
Yes, sir.
So we'll come and put generator here. I'll come and put generator here in 2021. What's the next asset?
Motor vehicle.
Motor vehicle.
furniture.
When was motor vehicle acquired?
2nd of June
2nd of June.
2020.
Okay. So I'll say motor vehicle was acquired 2nd of June 2020. So where do I have that date?
2022 tax year.
2020.
Are we all following?
Yes, sir.
Yes, sir.
Is it 2022?
Yes, sir.
Yes, 2022 tax year.
So I'll come here and put motor vehicle. What's the next asset?
Yes, sir.
Furniture.
Furniture.
When was it acquired?
30th of September 2019.
So where do I have 30th of September 2019?
2021 tax year.
Do we all agree?
Yes, sir.
Yes, sir.
So I'll put furniture to generator. What's the next one?
Building.
When was it acquired?
5th of February 2021.
5th February 2021. So where will it fall?
2020.
2023 tax year.
2022.
2020. So building will come and join motor vehicle. You see the beauty of allocation. It helps me to place the asset in their correct tax year.
Yeah.
If I don't do this, I may put all the assets in one tax year and think I'm correct.
Yeah.
So I have seen that out of the 4 new assets acquired, 2 of them will be in 2021, while the other 2 will be in 2022.
Yes.
Okay, so is there any other new assets?
No, sir.
No, sir.
No.
I'm done with new assets. Okay,
Yeah.
so take note. It's only new assets that you allocate here in this space. It's only new assets. Old assets and disposed assets, you don't allocate them here. So I will show you how to treat disposed assets. Now for disposed assets, you go down. You write disposals, or you say disposed assets. For disposed assets, we are just trying to know when to write it off, because I say if an asset is disposed, you do 2 things. You write it off and do balancing adjustments. So we want to know the year to write it off. We are not computing capital allowance for disposed asset because you can't compute because it's no longer in your premises. Rather, it's the new owner that will compute. So what are the assets that were disposed?
Generator and furniture.
Generator and furniture.
Generator and furniture. So
Yes, sir.
I want to find the year to write them off. Now use the date they were disposed, the date of disposal. Generator, what was the date of disposal?
4th of June 2021.
4th June
Yes.
2021. So check where
Yes,
this
sir.
date fell in that table. 4th June 2021. Where do you have it here?
2022 tax year.
Which year?
No, 2023.
2023 tax year.
2023 tax year.
Yes. So I'll come and put 2023 here. So you see, although I disposed this asset in 2021, but when I allocated, it fell in 2023. If you make mistake and write it off in 2021, you see I failed it. Okay, the next one, when was furniture disposed?
30th May 2023.
So also check, where do you have 30th May 2023? Yes.
2025 tax year.
2025
So it's in
tax year.
2025. Okay. So that means furniture will be written off in 2025. You see, although I disposed it in 2023, but it's to be written off in 2025. So when I get to 2023, I should remember that I have generator to remove from my book. If I get to 2025, I remember that furniture should be removed. So this is how you treat disposed assets. Just allocate it to find out when to write them off from the book and the year to do balancing adjustments. You see, I'm done. I have allocated my new assets. I have placed the assets in their correct asset. I have known that, okay, generator and furniture, I will start computing for them in 2021. While motor vehicle and building, I will start computing for them in 2022. But for the disposed assets, I'm not going to compute capital allowance for them, but I have to remove them from my book. Which year am I removing them? Okay, generator. I'm going to remove generator in 2023. I'm going to remove furniture in 2025. I hope it's clear.
For now.
Okay, so if I have done this, I will now start my computation. Because I was given new and disposed, and I've allocated the two. So I can now start my computation. Okay, so Celtic Limited computation of capital allowance. Up to 2025. So now, what are the assets? You know, capital allowance is computed in columns. What are the assets I have? What's the first asset? Start from the new one. Give me the way it is presented on that question. What's the first one that you have there? The new one.
Generator.
Okay, followed by
Motor vehicle.
Motor vehicle.
Which one again?
Furniture.
Furniture. And building.
Which one again?
Building.
Building. Now, is there any asset that have not been captured by this heading? Check if there's any other asset that is not captured here.
None.
None. So the last column should be the capital allowance, total capital allowance, which is the essence of this computation. This is what we want to get. So I will state the rate which will be given to you in the exam question. They will attach it. The rate for initial allowance, annual allowance, investment allowance. So for generator, what's the rate for initial allowance? 50%. Annual is 25%. Investment for generator is 10%. Motor vehicle initial allowance is 50%. Annual allowance is 25%. There is no investment allowance for motor vehicle. Furniture initial is 25%. Annual allowance is 20%. There is no investment for furniture. Building is 15 initial allowance, 10 annual allowance. There is no investment for building. All the figures are in thousands. That's what they gave us. Okay. Now we start. Which year are we going to start? Remember, can you hear me? We
Yes,
have
sir.
two assets. We have new assets and disposed assets. Which one are we going to compute for? And which one are we not supposed to compute for?
We are computing for the new.
New one. So go to where we allocated the new one. The allocation table. Check. Which year are we going to start?
2021 tax year.
2021, because that's the first year we have assets.
Yes, sir.
Okay. So we're going to start 2021. And there are two assets we'll bring in, generator and furniture. These are the two assets we are computing from 2021. So I will now go and bring them. I will say 2021 tax year. That's where I'm starting. So how do you bring in the assets are new? How do you bring them in? If you are bringing new assets, you bring it at cost. If you are bringing old assets, you bring them at tax return down value. So what are the two new assets you have there? Generator. So what's the cost of that generator?
1 million. 1 billion.
1 billion. So are we putting million like this?
Yes, sir.
Yes, sir.
Okay. So which other assets?
Furniture.
Furniture. So not motor vehicle. Furniture, what's the cost?
2.5.
5 billion.
5
2.5, sorry.
Is it 5
Furniture.
million or 2.5?
2.5.
2.5.
Okay, furniture, sorry,
Million.
2.5.
Okay, so these are the only two assets we are bringing. Now, remember, what you are looking for is capital allowance, total capital allowance. And capital allowance means initial allowance plus annual plus investment. So not the cost. So don't add up costs. So we start. What's the next thing we do?
Find the initial allowance.
We do initial. And initial, I told you, is just the rate times the cost. So the rate is 50% for generator. How much is it? 500,000, right?
500,000.
500,000.
What for furniture? How much? 25%. Please bring out your
500,000.
calculators. How much?
500,000.
It can't be 500,000.
625,000.
625, sorry.
625. So that's all. Then total the initial allowance. How much is the total of initial allowance?
1,125,000.
So that's the total initial allowance, 125. We put it under the total. So we'll go to annual allowance. How do we get annual allowance? Remember, this asset is new asset. How do you get annual allowance for new assets? How do you get annual allowance for new assets? I gave you two formulas for annual allowance. One is for old, one is for new.
Take away the initial allowance from the cost and you divide it by
Cost minus initial allowance.
Okay. So this is workings 2 now. This is working 2. I will now say determination of annual allowance for 2021 year of assessment. And since the assets they are new, I will use annual allowance, this formula, cost minus initial over n, because the assets are new. This is the first time. This is the first time we are claiming annual capital allowance for these assets. So, and the assets are generator and furniture. So what's the cost of generator? We said
Yes,
the cost is 1 million.
Yes, sir.
Is it not? And you said initial allowance is 500,000. Am I correct?
Yes, sir.
Look at it. So what's the N for generator? Generator is 4 years. How do we get N? Can someone remind us how to get N?
That's 100 all over annual allowance rate.
Yes. So for generator, 100 divided by 25. The annual allowance rate is 25. 100 divided by 25, 4 years. For motor vehicle, 100 divided by 25, 4 years. For furniture, 100 divided by 25 years. For building, 100 divided by 10 years. That's how you get the end. So generator is 4 years. That's what I use for. So when you do this, what do you have?
$125.
125.
125. So this is the annual allowance that will be claimed for 12 months. Okay, but remember we said annual allowance must be prorated.
Yes, sir.
You see, when I did initial allowance, I didn't bother to check proration because there's no proration for initial allowance. But once I do an allowance, especially if it's commencement question like this one, if it's a commencement question and it's in the first year, remember we're in 2021. 2021 is the first year of commencement for this question. This is the first year of commencement. So if I'm the first year of commencement, I know that I may have a shorter period, so I may need to prorate. So how do I know? I'll have to confirm. I have to go to the basis period for assessment to count the number of months that I do. So count.
Sorry, sir. Sorry, sir.
Yes.
Please, that 4. How did you get that 4 as the? I understand the formula, but how did you get that 4? Since the generator, it wasn't specified, or it wasn't specified that the generator is to be the tax life is 4 years. That's what I'm trying to ask.
I say 100 divided by annual allowance rate.
Okay. For new
This is annual
assets,
allowance rate. Yes.
Okay.
So just divide 100 with the annual allowance rate. That's how you get it. So we're now looking at allocation. I said go to the number of months in the basis period. So can you count, please, everybody count this month. Count this period. How many months is there?
11 months.
11 months.
Please count, everybody.
11.
Confirm it
11.
to be sure.
11 months.
11 months.
Now
11
you
months.
see that. Okay, you see this is commencement question, and this is the first year of commencement. That's where we are. That's why I bothered. Assuming it's second year, I will not bother because from second year will be 12 months. So now I have seen that this is not 12 months, this is 11. So what it means is that I need to prorate my annual allowance to 11 months. That figure, this figure I have here is for 12 months. So I need to prorate it times 11 over 12. So what do you have?
114,583.33.
100 what?
114,583.33.
583. So it means that 125 is for 12 months, 114 is for 11 months. So for this year, 11 months, I'm going to use 114. But subsequently, I go back to 5. You know, annual allowance is calculated on straight line method. So it should have been 125 all through. Okay, but since the first year is 11 months, that's why I'm using 114. But subsequently, the next year, I will go back to 125 all through. I hope it's clear.
Yes, sir.
So let's do for the second year, for the second asset rather. What's the cost of furniture?
2.5 million.
2.5. Why the initial allowance is 625?
Yes, sir.
How many years is furniture? 5 years. Is that correct?
Yeah, the annual allowance rate, please.
The annual allowance rate for furniture. Look at it, 20.
Yes, sir.
5 years.
Okay.
5 years.
So our end is 5.
So how much is it? How much is it?
375,000.
So this 375 for 12 months. And we say in this year, 2021, where there is 11 months there. So we need to also prorate this 11 over 12. So what do you have?
343,750. 343,750.
3 what?
343,750.
Okay, I hope everybody's confirming these figures. So for generator, we're using 114,583. Y for furniture, 343,750. 114,583. So 114,583. The reason is because this is 11 months. Y for furniture, we use 343,750. Is that correct?
Yes, sir.
So what's the total? Total the annual allowance.
Four five eight 333.
458.
458
333.
333. Yes, sir.
Okay, so we're done with the annual allowance.
Okay.
Now my question is, are we going to do investment allowance?
No, sir. Abi?
Yes.
Are we going to do investment allowance?
I thought the finance staff broke it out.
Yes. We are going to do,
Yes.
because the tax year is 2021. Did you get that? Are you there?
Yes, sir.
Yes, the tax year is 2021. You know, Finance Act, that is in 2023. Are we following? So we are going to do investment allowance, and there is an asset. Investment allowance on which asset?
Generator.
Generator.
So and what's the rate? The rate is 10%. So 10% of the
10%.
cost. So I will just put what I need to do. I will just put generator here. 10% of 1 million is 100,000. So I'll just go here and put 100,000. Did you see what I did? Any questions? Did you see what I did? Can we go on?
Why did you not put it under the generator?
Because
It's still
you don't
zero
consider
now.
it when you want to get cash in value.
Okay.
If you put it there, you may make the mistake of deducting it. So it's better you take it to capital allowance. But
Okay,
I see I've already I have indicated that it's generator here.
okay.
Is it clear?
Yes, sir.
So that means that it will not indicate it under generator.
Yes, you don't need to put it there to avoid me. If you put it there, there's no problem. But once you put it, don't make a mistake of deducting it to get. Do you understand?
Okay.
So that's all. I will not get my tax return value. So this is tax return value of the next year. The next year is 2022. I'll say 2022 tax return value. You see, tax return value now because these assets now they are now old assets. I've claimed some allowance in the first year, so they are now old assets. They are now a tax return value. So can you now give me the figures now? Give me the figures.
For generator, 385,417.
How much?
385,417 for generator.
Please, someone should be confirming. No.
For furniture,
My screen it's not here.
1531250. 1531250.
So what is total capital allowance? Now, when you come to capital allowance, this is what you add. You add initial, annual, and investment. So you add like this when it comes to capital allowance.
Come again, sir.
I say when it comes to capital allowance, you add
Okay,
initial.
sir.
Remember, this is initial, annual, investment.
Yes.
So you add like this initial, annual, investment. That's what you add.
Okay.
That's 1683333.
1683
333.
333. So this is the capital allowance the company will claim in 2021. So I've gotten the capital allowance to be claimed in 2021. That's this. Is it clear?
Yes, sir.
Yeah. So it's remaining up to, remember, we're doing up to 2025. So remaining 4 more years. So what do we do next? What do we do next?
We use the tax return
What
value
we use it to do what?
to find the annual allowance.
For which one?
No, sir, we still need to
Okay.
do for
You said we still need to
Furniture.
what?
We'll do the furniture on, sir.
motor vehicle and building.
Whenever you finish a particular year, like we are finished 2021, before you do anything, you go to your allocation table to see whether you have new asset to bring in. So we'll go back to our allocation table. Okay, we are done with 2021.
Yes.
We are now in 2022. Do we have
Yes.
asset to bring in 2022?
Yes, sir.
Yes.
Yes. Now go to disposal 2. Do we have asset to remove in 2022?
No, sir.
Except that of 2020. Okay, we've done that. Generator.
We don't have asset to remove in 2022. The only thing we have in 2022 is to bring in these 2 assets, as you can see, motor vehicle and building. So the allocation table tells us what to do. So we can now bring motor vehicle and building because we are now in 2022. So we'll bring them. How do you bring them in? At what?
Cost.
We'll bring them in at cost because they are new assets.
Yes, sir.
Okay. What's the cost of the motor vehicle?
5 million.
5
That's
million.
5 million.
What's the cost of the building?
3.4 million.
3.4. Now we are
Yes,
told
sir.
something about this building.
Yes, sir.
What were we told about building?
That the second hand building, and
Okay. So if building is acquired second hand, what is the implication?
Now we can't see your screen. Oh.
The implication is
Yes, I
that
want to share.
the implication is that no claim of initial allowance.
Yes.
Then you can claim annual allowance, but based on lower of original costs and purchase price.
Right.
Yes. So now you see, look at this building now. This is the building they are telling us that this building bought 3.4 was bought second hand.
Yes.
That the original owner constructed it at 2.5. So that means this owner, the original owner, constructed at 2.5 billion. But we now bought it from him second hand, 3.4 million. Remember, this is also in billion, was suspended zero. So now we can't do initial allowance for this building. We can do only annual allowance. Which cost are we going to use?
You're going to use 2.5.
Million.
2.5 because it's the lower.
This is the
2.5.
Lower.
Yes, we use the lower.
The lower.
We use the lower. That's 2.5. But you know,
The lower is 2.5.
that's 2.5. But in some question, yeah, as you can see in this question, they gave us the two costs. In another question, they may not give you the two costs. They will just give you just one cost. So if you are giving one cost, then assume that that is the lower. Just use it. But if you are giving two like this one, then pick the lower. Yeah,
Okay,
so we're using 2.5 instead of 3.4.
All right.
So let's.
Yeah, your screen, sir.
I know. It will come up now.
Okay, sir.
So how much am I bringing for building now?
2.5.
Yes. So that's the sense of that information. Okay, what should I do next? What should I do next?
Annual.
Initial allowance
And
for
put initial
the
allowance for building for motor vehicle.
for motor vehicle.
Allowance, yes.
Yes, I will do initial allowance
For motor vehicle.
for the new asset. And its cost times the rate, that is 2.5. Am I correct?
Yes, sir.
Then for annual allowance, for building rather. For building, what's the initial allowance?
There's no initial allowance for that one.
There's no initial allowance because it's second hand. So I put dash there.
Yes, sir.
I hope it's clear. So what's my total initial allowance now?
2.5.
2.5.
2.5.
I'm done with initial. What's the next thing? Okay, what's the next thing?
Find the annual allowance for
Annual allowance.
Annual allowance. So annual allowance for which one now?
for the boat.
Which boats?
For the motor vehicle.
For all the assets. For all the assets.
For all the assets, including the other ones we brought last year, all of them. Okay.
Yes, sir.
So what's the annual allowance for generator?
125,000.
125. We have it already here when we computed and we prorated.
Since it's already 12 months.
Yes, it's 12 months. From the second year, it's 12 months. So we're using this 12 month figure now. It's only in the first year that you may have shorter period. So 125.
Yes, sir.
Okay, and also for furniture, you know, we have done it before. Furniture was how much?
375.
The 12 months figure. So the one we need to do for now is the new ones. We use the formula. Remember. So let's compute. So I will just say working 3, computation of annual allowance for 2022. And I'm using the formula because they are new assets, cost minus initial over N. So the two assets are motor vehicle and building. So motor vehicle and building. What's the cost of motor vehicle?
5 million.
5 million.
5 million. Yes. So motor vehicle is 5 million. And we said the initial allowance was 2.5.
Yes, sir.
Our motor vehicle is 4 years. So what do you have? What do you have?
625.
625. So this is the annual allowance. There is no proration from second year because the number of months is 12. So for building, how much is it?
Yes, sir.
How much is building?
$2.5 million divided by 250,000.
Okay, building is 2.5. How much is the initial allowance? There is no initial allowance, zero, because it was second-hand acquisition. So building is 10 years. We got 250,000. I hope it's clear. Is it clear?
It's clear, sir.
That was the percentage for building.
Building is 10% now annual.
Okay.
Building is 10% annual. 100 divided by 10 is 10 years.
Yes, sir.
Okay, so the motor vehicle, the annual line is 625, while building is 250.
Yes, sir.
So I'll come here, 625. Then building is 250. So what's the total annual allowance? Can you add up this annual allowance now?
For what assets?
Add the annual allowance.
$1,375,000.
1,375,000. So we are done with annual allowance. Is there investment allowance?
Yes, sir.
No.
Huh? Is there investment allowance?
No, sir.
No, because there is no generator or plant machinery equipment in 2022. So no investment allowance. So this is all. Can we now find the tax sitting down value? So we are now in 2023 tax sitting down value. So give me the figures now. The last one is 2,250. That's building.
For generators, sir.
Okay.
250,417.
260,
417.
417. So this one is generator. Okay. Then for motor vehicle.
For motor vehicle, 1,875,000.
1,875,000.
Yes.
Mm-hmm.
Sorry, sir. I have
That's
one
motor.
little question, sir. Sorry. That S
Okay. That what?
for building. How did you get that S?
That's what?
That S, when you are computing for annual allowance for building, you know it's an old asset.
Which of the building?
Building, when you are computing annual allowance for 2022 annual allowance tax year,
Yes.
yes. How
Yes.
do you get that S?
X.
Yes.
We didn't use X here. X is when it's an old asset. It's not an old asset here because this is the first year we are computing. It's a new
Okay, this
asset.
is because for the first year. Okay.
We use cost minus initial allowance. This is the formula we used. This is the formula we used. Look at the building. This is the formula.
Okay.
Because this is the first year, so it's a new asset. So for the third one, what's the that's F and F?
1,000,000
1,000,000
156,250.
156,250. F and F. So please confirm all these things. So what is the total annual allowance, total capital allowance rather? Remember, you add this 25 plus 1,375.
What of building, sir?
I've already gotten building 2.250.
Okay. Okay.
So what's the total? That's 3,875,000. I hope it's correct.
Yes, sir.
So this is the annual allowance, capital allowance that we claimed in 2022. The capital allowance that we claimed in 2022. So we are now in 2023. What are we supposed to do?
The annual allowance of all the assets.
What are we supposed to do in 2023?
We have to first go back to the tax table. Maybe if we have new asset to bring in or we have some asset to dispose.
Yes. So we'll go to the table. We'll check. Do we have asset to bring in?
No, sir.
Oh,
But we have to dispose.
Do we have asset to dispose?
Yes, sir.
Yes.
Generator.
Generator.
Funny.
So this generator will go off our book now because we're in 2023. So we'll go and remove generator from the book. So how do we dispose? Please, this is not how to treat disposal. So we say to remove asset, we say disposal. And that asset is generator. To dispose, we'll make it to be the same thing. So I will get 0. We'll try to make 0, get 0 here. And how do we get 0? We minus the same figure, we'll get 0. Did you get what I did?
yes.
To dispose means the asset is no longer in your premise. So that asset should be 0.
Okay.
Written to 0. So the only thing you can do to make that to be 0 is to minus the same figure. I hope it's clear.
Yes, sir.
Now, but it's not in all disposal you make it to be 0. Because we have two types of disposal. We have full disposal and partial disposal. So if you make it to be 0, you are saying it is full disposal. You are saying that all the generators were sold. But you may have a situation whereby maybe you have 5 generators and the cost of the 5 generators is 1 million. That means each of them is 200,000. 200 times 5, 1 million. And you have 1 million in your book. Now, not all the 5 generators that were sold. Maybe out of the 5, you sold only 2. So you agree with me now that if you put that written down value to be 0, that would be wrong because you didn't sell all the 5 generators. It's only 2. So that means something must remain. Did you get that?
Yes, sir.
So if it is partial disposal, something must remain here for the remaining ones. If you put 0 here, you are saying that it is all the generator that was sold. Nothing, no generator was left. That's why you see in some questions they will tell you motor vehicle 2 in number, generator 5. They will give you the number of items that make up that. So this we now have to go to the question. Can you now go to the question and tell me whether this disposal is full disposal or whether it's partial disposal?
It's full disposal.
It's full disposal. Do we all agree that it's full disposal?
It was not stated in the question.
No, but the cost
So look at the
of
question very
acquisition
well.
was the cost of acquisition was repeated there for disposal.
Okay. So the examiner may not just tell you that it's partial, it's full, but he will give you some signals.
Full disposal.
So you have to read the question very well to see. Now look at generator. What is the cost of generator when it was acquired?
1 million.
1 million.
So the entire generator acquired is 1 million. Now go to where the generator was sold.
180
What is the
billion.
cost of the entire generator sold?
180.
1
No,
million.
cost.
1 million.
1 million.
Yes.
So what can you see there? 1 million, 1 million. What can you see? They are the same. Meaning they are
Yes.
telling
That
you
means
that
the entire generator.
all our generator is worth 1 million. But when we are disposing, we dispose all our generator that was worth 1 million. So we didn't keep
80,000.
anything. It's the entire generator they bought for 1 million that they disposed. That's what they are saying.
Okay.
So
That is full.
what type of disposal is this generator?
That's full.
That's
Full
disposal.
disposal.
Okay. Now do the same thing for furniture.
Sir,
What
sorry.
type of disposal is furniture?
The question is saying sales proceed. That is what they gotten. That like what they sold the asset. The generator was 180,000 there. So and the cost is 1 million.
Yes. Cost is what
So
they bought it now.
yes,
Sales proceeds is the amount they realize from sale.
yes.
So when you want to know whether it's full disposal or partial, you check the cost. Match it with the cost of generator they had on ground before they sold.
Okay.
So they are telling you that we have on ground, all the generator we have is worth 1 million. When we are selling, we sold all the generator we have worth 1 million. Did you get that? Is it clear?
Got it. Yes, sir.
So I say do the same thing for furniture to find out whether it's full disposal or partial disposal.
It's partial.
Partial.
Okay. What's the cost of the entire furniture?
2.5.
2.5. When they bought furniture, they bought all for 2.5. What's the cost of the furniture they sold?
1.2.
1.2.
1.2. So they are telling you that we didn't sell all the furniture we bought for 2.5. We kept some. We only sold the ones worth 1.2. Did you understand that?
Yes, sir.
Yes, sir.
So maybe this 2.5 is, let's assume it's 3 furniture or it's 2 furniture. It's 2 furniture that make up this 2.5. One was 1.2, the other one is 1.3, totaling 2.5. Now, when we are selling, we only sold the one worth 1.2. We didn't sell the one of 1.3. So it's not all the furniture that was sold. It's part. We took some furniture and sold. That's what it means. So if that is the case, when we are removing the assets, something must remain for that 1.3, the one that we didn't sell.
No.
Did you get that?
Yes, sir.
Okay. All right. So now, can you see the board? You can see the board now, right?
Yes, sir.
Now, our treatment for generator, is it correct?
Yes, it's correct.
It's correct. Why is it correct?
Because the
Because
cost
it's a
of
full
the
disposal.
cost of what they dispose is is the actual cost of the asset, the actual cost of the asset they have. They have in the store
Full
So,
disposal.
or
so
with them.
because it's full disposal, so we can
Yes.
make it to the zero.
Yes.
That's how to write off an asset. So now we have written off generator. It's not zero. That means it's no longer in our book. So what do we do for the remaining ones? We bring them down. We bring them down. 1875, 1156, 250, 2250. So when we bring them down, what do we do next?
Find the annual allowance.
Annual
We do
allowance.
an allowance for the yes, we do an allowance for the remaining ones. But they are not sold now, so we do an allowance for them. But for the ones sold, what will be the annual allowance for the ones sold?
It's zero now. We're not claiming annual allowance for that one.
Zero. We can't compute to put dash there.
Mm.
Then for motor vehicle, we had annual allowance before. We use it. The 12 months figure. That is 625. I hope it's clear. Is it clear?
Sorry, sir. I have a question.
Yes.
This,
Go ahead.
this formula for annual allowance for old assets, where you have tax written down value divided by n minus x, when do we use it?
We are going to use it if it's old assets. Like we said, it's a formula for old assets.
Okay,
So
so
assuming
this
this is
asset,
an old asset,
I thought they would be considered as old assets now.
it's an old asset, but we are not giving tax in down. We already gotten the annual allowance, which is straight line. We go on. What we use it when, assuming they gave you in the question, they say this is tax in down. You are not giving cost. What we are giving is tax in down. But
Okay.
do you understand?
Yes, sir.
So that's when you use it. So what's the annual allowance for the next asset? Furniture and fittings.
375,000.
Yes. Building is 250.
Yes.
So what's the total annual allowance? $1 million.
1,250,000.
Is that correct?
Yes.
Yes, sir.
1 million
So we are done for this. Yes, we are done for this year. So here will be zero. That is 2024. That's sitting down value. This will be 1,250,000. Please confirm it. This will be 2 million. Give me the figure for furniture.
$781,250.
781,250. $781,250. I hope it's clear.
Yes.
So we're now in 2024. Now in 2024, what do we do next?
We check
Annual.
if we have new asset to bring in or new one to dispose or another one to
So we'll go
dispose.
to our allocation table. Let's go
Yes.
there. We'll go there to check. So we don't have new assets in 2024. Do we have assets to remove? We don't have.
We don't
So we
have.
don't have. What do we do next? What do we do?
Annual allowance.
You compute
We do
annual
annual
allowance.
allowance for the remaining ones. Yes. So the annual allowance there is 625, 375, 250, giving us a total of 1250. So that's all for this year. We are now in 2025. That's sitting down value. So bring the figure of that 625. Give me the figure for furniture.
Four 406,250.
So it's correct. Okay. So we are now in 2025. What do we do next?
We have to first remove this,
We do what?
write off the disposed assets.
So we check
Furniture.
if we have new assets. We don't have new asset to bring in, but we have asset to remove. We have furniture to remove. Okay, so I have already told you how to remove an asset. So what do we do next?
It's a partial disposal.
So how do we do that? We write disposals. The difference is, remember the asset is, which asset is that?
Furniture.
Yes. So the difference is that here will not be zero because it's partial disposal. So we need to get what to remove here. That's the taxing down value of that one sold, the one sold, not this 406 is the taxing down value of all the furniture. So we need the taxing down value of just the one sold so that we have the remaining ones here. Can you tell me what this will be? What will be the taxing down value of the one sold? What are we going to deduct here?
1.3 million.
In 1 minute, can you tell me what should be there?
I'm going to have 1.2 million here.
Why 1.2 million? It's even more than the 406. It can't be more than the 406. How did you get the 1.2?
So that means that we are going to compute balancing adjustment.
Balancing adjustment? No, that one is done outside, not here.
Okay.
Okay, you can use ratios. There are some ratios to use to get them. Okay, but the best way to do that is, let's say workings, is it 4 or 3? So you just come to the workings. Let me show you. Workings 4. Determination of tax written down value for disposed furniture. So what we are going to do is just a recomputation.
Okay.
Now this 2.5 is for what?
It's for the cost.
Is the cost of all the furniture. both the remaining one and the one disposed. Okay.
Yes.
Yes, sir.
So what is the cost of the one disposed? They gave you
1.2.
1.2.
1.2. So if we replace this 2.5, if we replace it to 1.2 and recompute, when we use 2.5, when we use the cost of the entire, this is the tax return value we had. We got 406. This is the tax return value of all the furniture. So
Yes,
if we replace it with 1.2, which is the one sold, and recompute this, you know that the figure here will change, right?
Yes.
That's what we are looking for. So just assume that it's not 2.5 that's supposed to be here, it's 1.2. That means you are computing for only the one disposed. So do everything we did here, do the initial allowance, do the annual allowance till we get to that year. Any figure you have there becomes what we are looking for here. So, but we are not going to alter our computation here. Okay, we're not supposed to alter it. So that's why I moved to working for to do it. So everything I did there, I will do it here. This is for furniture and fittings. I state the rate, initial allowance, annual allowance. That's initial allowance is 20%, 25%. Annual allowance is 20%. The figures are in thousand. So which year I go back, anything I did in my first company is what I will do. Which year did I bring in furniture? I brought in furniture in
2021.
Did you get that? Yeah, so I'm going to start in 2021. Assuming is this motor vehicle that I brought in 2022, I'm going to start in 2022. So anything you did for furniture is what we are going to do there. I started furniture in 2021, so I'm starting 2021. The only difference is that I'm changing the figure. Instead of 2.5, I'll be using 1.2. I hope it's clear.
Yes, sir.
Okay, so I'll say 2021, year of assessment. So I will start cost. I brought it in at cost. Instead of 2.5, I will use 1.2. I did initial allowance, right?
Yes.
25% of this is 300. I did annual allowance. But in that annual allowance, was there proration?
yes, that's true.
I did proration in that year. In 2021, there was proration. I did proration.
Yes,
So I'm going to do
11 over 12.
Yes. So it's going to be 11 over 12 time. Give me the annual allowance. The annual allowance is cost minus initial over N. Remember, furniture is 5 years. So what's the annual allowance before the proration? Cost minus initial over N.
So that will be
How much?
1.2.
Huh?
300 divided by 5. 180.
It should be
180,000.
180 for 12. Yeah, so 180 is 12 months. That's what we're going to use subsequently. But do 11 times 11 over 12 now.
165.
165. So that's what we're taking here. So can you now give me the figure? Subtract. How much?
735,000.
735. So this is the tax down value for 2022. Remember, we are looking for which tax down value? We're looking for tax down value for 2020,
25.
5. So we get to that place. So in 2022, we only do annual allowance. So we say annual allowance. And the annual allowance will be 180. This is 12-month figure. So when you subtract 180 from this 735,000, what do you have?
555,000.
555. So this is 2023 tax written down value. Where are we there yet? We are not there yet. So we do annual allowance for 2023, 180. What do you have?
375,000.
375,000. So remain, are we there now? Remaining one, right? AA. 180. 2025. What do you have?
195,000.
195. So this is what we're looking for. This is the thousand down value of the furniture sold out of the 406. So out of the 406, which is the thousand down value for the entire furniture, the one sold is 195. That's what we're looking for. I hope it's very simple to get it. It's just recomputation.
Sir, is there any other method?
Some people you can use ratio.
Because I
You
got
can use ratio.
yeah, it's 48%.
Shortcut.
I got I got 48 between 48%. So I now multiply it by the so I got 195,000.
You can still get it, but it's just that the disadvantage of that ratio is that at times it may not apply to the questions you are given.
Directly.
The question you'll be given, that ratio may not apply.
Okay.
But this one can take any question you are given.
Okay.
Yes. So now we are done. So you see how we did this one? This one is a kind of special compared to the other one, full disposal. Full disposal is straightforward. Why this one you have extra work to do, but to get this. So now you have gotten it. We now bring down the remaining one. 0.625. Here will no longer be 0. So what should be here?
211,250.
So this is the thousand down value of the remaining ones now, after we have sold out of the 406. Okay, so what do we do next?
That should be the answer.
Huh?
That's all.
Are we done? That cannot be. Or have you gotten capital allowance for 2025?
You need annual allowance for 2025. Sorry.
What we just did is to remove the one disposed, but for the remaining one, we need to compute annual allowance for them. So we do annual allowance for the remaining ones. This one, what will be the annual allowance for motor vehicle? What will be the
625.
annual allowance for motor vehicle? Huh?
It will be six,
We
it will be 624,990.
yes.
Because if you put 625 here, it will be 0. And if it's 0, it means you have sold the asset. We are not told it was sold. So whenever an asset have not been sold, but we have claimed all the capital allowance, then we'll leave 10 naira, which is notional value. So we minus in a way that we are going to leave 10 naira. So that's 624,990. 999 approximately. So that 10 naira will remain. So for this one, this is not the last year, so it's still 250. Now, what for the one sold? What for this one disposed? The remaining one after we have removed the one sold. furniture and fittings. What will be the annual allowance for the remaining ones? That is another challenge. Once it's partial disposal, know that you have two things. You have to determine the tax incident value of the one you sold. Then you have to compute annual allowance for the remaining ones.
We can go back to our workings.
Okay. So what will it be? What will it be?
So we have to recompute again for like are we going to minus the cost of the disposed item from the original cost and compute annual allowance for capital allowance for the remaining part?
Sir, show us the
No, you
screen
don't
of the
need that.
workings.
Okay. Which of the work is it, this or
The
this?
one, take it again, the last one. Okay, this one. I think we're taking 180,000.
Okay. Now, what you just need to do. See, this is when when you are going to use that formula. Use that formula now. That formula for old asset. That's using that value over n minus x.
Okay.
So use it now. So we are going to do the annual allowance for the remaining asset after I remove the one disposed. Use this formula. What's the tax down value?
195.
Is it 195 here?
No, sorry, 200 and
211. Are we there?
Yes, sir.
211, 250. 211, 250. That's the tax down value now.
yes, sir.
So 211, 250. How many years is the furniture? That's the end.
Hmm.
5 years is the furniture.
Furniture is 5 years now.
5 years.
So the X, how many years have been claimed? So tell me how many years have we computed for furniture? How many years do we compute?
5,
We
1,
started in
4.
2021.
4.
It's 4 because we are about to do 2025.
Yes.
So that is the X. I hope it's clear.
Yes, sir.
So we have done for 4. So what's the answer?
211, 250.
Yes. So meaning this figure is for the last year. Because we're in the last year, that was meant. So this is how you do it. When it's partial disposal and you have written off the past, so to do an allowance for the ones remaining, use this formula. I hope it's clear.
Yes.
So here will be 211, 250. But since
240.
this remaining one have not been sold, we return 10 naira. So 249. I hope it's clear.
Yes, sir.
Yeah, so this 2026 starts in that value. Here will be 15. So give me the total annual allowance for this year.
Supposed to be 240, not 249, sir.
No, you know that was is in thousand. The figures is in thousand. You know,
Oh, sorry.
that's the reason. So give me the annual allowance for this 2025.
108.
Uh-huh.
6248.
Okay, so that's all. We are done. The examiner says we stop in 2025, but we have done up to 2025. So meaning this is the annual allowance that will be claimed, capital allowance that will be claimed in 2021. This will be claimed in 2022. This will be claimed in 2023, 2024, and 2025. I hope it's clear. Any question on this? So I will take the next question. Any question?
bí ti
So
right
you
one
know
yẹn
how to do.
kì í ṣe ti right one yẹn mo mú jáde lánàá left one mo mú jáde lánàá.
So you know how to do new assets and dispose assets. Now, the next lesson remaining is for old assets. We have treated new and disposed assets. So whenever I see new asset, you should know what to do. You see old
báwo nǹkan
disposed
tó gbé
asset, you
sórí
should.
náà nǹkan tó gbé sórí náà lọ wò ó.
Mr. Adu, please mute yourself, please.
Can we move to the next question?
It's time for prayers.
we can pause this now and go for prayers. So let's if there's no question, let's continue with the second one. So let's take the second one. Let's go to our material too. Okay, can you see the material now?
This is the one we just finished.
Okay. Yes, the second one.
Skincare Limited.
Size illustration 3. Yes. Okay, so let's look at it. It says Skincare Limited is a manufacturing outfit based in Abeokuta, Ogun State. Dr. Lolu, the managing director of the company, who is a chartered accountant, was of the opinion that the task was excessive due to an error in a return made by the company. He further disclosed that the error occurred as a result of the fact that the capital allowance computed by the junior accountants, which was allowed as a deduction in arriving at the total profit, was understated. The managing director provided the following information relating to the qualifying capital expenditure to you as the newly appointed tax consultant for the year ended 30th June 2021. Asset acquired during the year ended 30th June 2021 as follows. We have extension to building, furniture and fitting 13 in number. The cost is also given. The tax written down values of old assets of the company we are given as follows. The assets are building, motor vehicle 3, furniture and fitting 25, and generator. The date of acquisition is given, and tax written down value given. You are required to calculate the capital allowance the company is entitled to claim during the year in dispute and two subsequent tax year. Okay. Do you understand the question? Did you understand the question?
We are still trying to reach, sir.
Okay, so let me give you 30 seconds to go through.
Yes, we understand it now, sir.
Okay. All right. So if it is clear, is this question the same as the first one we solved? Are they similar? Are they similar?
No.
This one has
Partially.
both
Because
new and
we
old
have
assets.
new asset. We have new asset and old asset.
Okay, we have new assets and old assets in this one. So which one is the old asset here?
The building,
Building,
motor vehicle,
motor vehicles,
furniture
furniture
and
and
fittings,
fittings, and generator.
generator.
So why do you think they are the old assets?
Because we have
Because they are
tax
tax written down
written
value to
down
the
value.
building.
Yes. All right. Once you see taxing down value, there is an old asset. If it's not old asset, they will not give you taxing down value. So this taxing down value means some years have been computed. This is the tax value. So you have to continue from where they stop. So the first set of assets, as you can see, there's no taxing down value there. So that is cost. Those ones are new. So in this question, we are giving new and old. In the one we saw before, we are giving new and disclosed. So the new additional lesson to learn here is how to do old assets. You already know how to do new. So apart from that, what else is different from the first one?
The number of new assets, some of them for the acquired and old, the numbers are different. For instance, furniture and fittings, 13 were acquired during the year. But
No.
we
Okay.
have
Now that number, you don't need it in your computation.
okay.
What the only thing you need that number for is notional value. Instead of 10 naira, if it's one asset, you return 10 naira. So now it's 13, you return 130. 10 times 13.
Okay.
That's just the only thing you need it there for. Okay, so which other different? Now let's look at the structure of the question. Your question that will come in the exam is either you are giving commencement, cessation, change of date, or ongoing business. That's how all your questions will come. Either it's a commencement question or cessation or change of date or ongoing business. The first one we saw is commencement. This one is what?
Ongoing business.
Is ongoing business. Do we all agree that it's ongoing business?
Yes, sir.
Yes. So that is different now. This one is ongoing. That one is commencement. So we are not going to apply commencement rule here. How do we assess an ongoing business to tax?
Actually, business.
Is it actual year? We use preceding year basis, not actual. So since are ongoing, we are going to use preceding year basis to get the basis period. That is different. The other one we use commencement rule. Now we're using period because it's an ongoing business. So what's the first thing we do? How do we start the computation now?
We have to first determine the basis period for those assets and allocate them.
For, for capital allowance and use it to allocate. Yes, that's always the first thing to do. So let's go to the board now. Please, I may not be coming here, so hold your material. Let's go there now. So what's the name of the business?
Skincare Limited.
Skincare Limited. So as usual, workings 1. Determination of basis period for capital allowance and assets allocation. Tax years, basis period for assessment, basis period for capital allowance, assets allocation. Okay, so we need basis for capital allowance so I can allocate, but we need to get out of assessment. And we said to get it is an ongoing business, so we use preceding year basis. Now, if it's an ongoing business, there will be a year under review because an ongoing means some years have been done. Okay, maybe we're in the current year now. So there will be a year under review. The examiner will mention the year, the current year, the year under review. So go to the question and tell me the year under review.
The year ending 30th June 2021.
Yes, so the year under review is year that ended 30th June 2021. So if the year ended 30th June 2021, where do you think the year began?
1st July 2020.
1st July 2020. So this is the year in review. This is the year, current year. Okay, they will always tell you once it's an ongoing business, they will tell you the year they are considering. So this is the year under review. But you'll be wondering why I left. I see I left some space up here. The reason is that I was given an old assets. Once you see old assets, then you have to leave space. If it's an ongoing business, you have to leave space because remember, old assets you need to find X. I will show you what that means. So this is the year under review. This is how you do an ongoing business. This is the year under review. Now, the basis period for capital allowance for an existing business is the same thing. So whatever you have here will be the same thing here. Once an ongoing business, know that it will also be the same thing. Are you all here? Are you hearing me?
Yes, sir.
Okay. So what is this tax year? If this is the basis period we're looking at, what is the tax year?
2022.
So we're looking at 2022. BY income of 2021 started 2022. So this is the year. So we are considering that of 2022. That's the current year. That's the year under review. And I've told you that the basis per capital allowance will always be the same. So if that is the case, I'm done. So I can now allocate. So for ongoing business, there will always be a year under review. And the basis per capital allowance will always be the same thing. So let's allocate. Now we are giving new and dispose. So I told you it's only new asset you allocate here. So go to the new asset. What's the first new asset?
Extension to office building.
Building.
Office building.
Extension of
So when
office
did that
building.
happen? So when did that happen?
To 30th June 2021.
30th June 2021. So where do you have that date? Check.
The
Is it
first
here?
one here. Yes, sir.
2022.
Is here?
That year.
Yes. Yes. So building will come here. So what's the next asset? The next new asset?
Furniture and fittings.
Furniture and fittings.
When did they acquire it?
The same period. The
Same
same
year.
period.
The same. So fortunately for us, it also come here. What's the next one?
Motor vehicle.
When did they acquire it?
The same period.
The same period. So motor vehicle will also come here. So fortunately for us, all the new assets, they were acquired under this, they fell under this basis period. So we are done with the new assets. So if it's an ongoing business, you see that it's very simple for new assets. So the next thing is old assets now. We need to allocate old assets, but I told you don't do it here. I will show you the reason why I left this space as we go on. So for old asset, how do we allocate it? You go to working two, you go to the next working. So I will just say working two. Determination of, for old asset, I can't do initial, it's only annual allowance. So I will say determination of annual allowance for old assets. And old assets, it has annual allowance computation of old assets has a formula. Remember, I told you use this formula. Annual allowance start sitting down value n minus x. Did you get that?
Yes, sir.
So for old assets, you just use the formula for annual allowance and give because you're not the initial allowance. So if all the variables are given to you, then you just put it here and get the answer. That's it. So old asset will not even have any business coming here if all the variables are given to you. But the problem is that at times X may not be given to you. Remember, I told you they will give you 1,009 value. You know how to get N, but X may be missing, which you need to find. So what's the first old asset?
Building.
Building. What's the 1,009 value?
2,318,600.
What's the N for building? You should know the N. Building is always 10 years now.
Yes, sir.
Is that correct? So check.
Yes,
what's the number of years that have been claimed? Did they give you X? Did they tell you the number of years that have been claimed?
no.
They didn't tell us. You see, there's a problem now. That means we need to find X ourselves. So I will leave it. What's the next asset?
Motor vehicle.
What's the next asset?
Motor vehicle.
What's the transgender value?
6,476,000.
6.
476,000.
6 what?
476,000.
476. Motor vehicle is 4 years. And we are not giving the X. We are not told the number of years claimed. So you see, in some question, they will give you the X. If you are given the X, then it's simple. You just put it here and get the answer. So this is the worst case scenario where you're not giving the X. You need to find it yourself. So what's the next old assets?
Furniture and fitting.
What's that cylinder value?
1,385,600.
1,385,600. Over furniture is 5 years. We don't have the X yet. Any other old assets?
Generator.
What's that cylinder value?
3,789,000.
3,789,000. Generator is 4 years. We don't have the any other one.
No.
That's all. So we need to find the x for us to be able to apply this formula, because all the variables must be gotten. So you see, that is the reason why I left this space. Because I have looked, before I left this space, I've looked at the question. I saw that I was given an order set. So whenever you are giving order set, the next thing you check further is whether you are giving x or not. If you are giving x, you don't need to leave any space. But if you are not giving x, then you need to leave this space, because you must find x, just like the cases. You see, we are unable to apply this formula because x is missing. So we only continue when we find the x. Now, so let's find it. So how do you find it? To take the first one, building. Use the date it was constructed or acquired. So when was building acquired? The old one.
On the 12th
29.
September.
12th of September 2018.
18. So where do you have this date? Is it here?
It's not there.
Is it in the year under review?
No, sir.
It's not there. So where do you think it will be?
You can form it backwards.
Will it be before or backward? You see, that's the essence of the space, because you see, before I do this, I've already looked at the question. I've seen that I was given order sets, but I wasn't given x. So if that's there, I will trace it backward. That's why I left this space. So I will trace it. How do I go there? I'll use the concept of continuity. So this basis period, like we did in commencement, this basis period, new commenced, begin from where this one. If it begins 1st July 2020, it must have ended 30th June
30th June 2020.
for this to begin the next day. So if that is the case, this one began 1st July
2019.
2018. Is that clear?
Yes, sir.
And the tax year will be 2020 or 2021 rather.
2021.
2021. So now check that date. Is it that date? Is it there now?
No.
It's not there yet.
No, it's not there.
So we'll continue to go back till we get it where it is. So if this one begins 1st July 19, then this one will end 30th June 19. So it will begin 1st July 18. And the tax year will be 2020. So check, is it there?
It's there.
It's there. So now we have known that, okay, for this, is it building?
Yes,
For this building, this is the first year. This is the first year they started claiming capital allowance. So they started claiming in 2020. That's what it means. Is that clear?
Yes, sir.
Is that clear?
Yes, sir.
And which year are we about to claim now? This is the year we are looking at. This is the year we are looking at. This is the year we want to claim. So we have seen that they started claiming for building in 2020. So how many years have they claimed?
2 years.
They have claimed 2020, 2021. So we are about to claim 20. So they have claimed 2 years. You see how we got the X. So that means the X for building is 2 years. 2 years is what they have claimed. I hope it's clear.
Come
Yes,
again,
sir.
sir.
For now.
We said for building, the building, these dates, it was acquired 12 September 18 and it fell here in 2020. So what means that they started claiming for building in 2020. And I said, the year we are looking at, the year under review is this year, 2022. So if they started claiming 2020, it means they have claimed 2020, 2021. We are about to claim 2022. So they have claimed 2 years before now. Is that clear?
Sir. Yes, sir.
Yes, sir.
So we have gotten the X for building. We'll come here and put 2. That means out of the 10 years, they have claimed 2 years. You see how we got it? So we'll do the same for motor vehicle. When was motor vehicle constructed or acquired?
18th of November 2019.
18th of November 19. So where do you have
18
this date
November
here?
2019.
Where do you have it?
2021.
2021. That's where it fell. So how many years have they claimed?
1 year.
1.
1 year. So 1 year is what they have claimed. So I'll come here and put 1. Furniture and fittings. When was it constructed?
19th July 2019.
So where do you have that date? Here.
2021.
21.
So how many years have they claimed?
1.
1. We put 1. Then the last assets, which is a generator.
29th
When was
April.
it acquired?
29 April 2020.
So how many? Where will it fall here?
2021.
So how many years have been claimed?
1.
1 year. So that is how you get it. And this is the worst case scenario where you are not giving S. But if you are giving S, you see, it will not go this route. We'll just put it in this formula and get the answer. You see, you have seen the essence of the space. The reason why I left the space, because I have seen that I was giving O, that's it, and there is no X. So I need to go back to place the years there. So now, can you now give me the answers? Give me down the answers.
Number 1, that for building 289,825.
289,
825.
825. Please confirm this figure, sir.
For motor vehicle,
Yeah.
2,158,667.
Okay.
2,158,667.
All right.
Approximately.
For the next one.
$346,400.
346,400. Okay.
The
And the
generator
last
is
one.
1,263,000.
262.
1,263,000.
Okay, 263. So these are the annual allowance for the older. See, it's very simple for older. So if all the variables are given to you, then you just do this. That's all. So this is how you treat older sets. Now everything is ready. We have done for new, we have done for old. So we can now go and compute. So we can now say the name of the business is
Skincare.
Skincare. Skincare Limited. Computation of capital allowance. Or I can say from 2022 to 2024, because they say we should do 2 subsequent tax years. So the year under review is 2022, then 2 subsequent is 2023 and 2024. So give me the headings now. Start from the new ones serially. Follow it serially. What's the first new asset?
Building.
Building. Followed by which
F
one?
and F.
F and F.
Motor vehicle.
What else? Motor vehicle. What else?
That's all for
So go to the old assets, see whether there is any heading that is missing. Anyone that is not captured.
Generator.
Generator. Any other one?
That's
No other one.
So the last one, we go to capital allowance. So we state the rate, initial allowance, annual. We are starting in 2022, so there may be investment allowance. So building is 1510, 15 initial, 10 annual, no investments. Furniture is 25 initial, 20 annual, no investments. Motor vehicle is 50 initial, 25 annual, no investments. Generator is 50 initial, 25 annual, investment 10. So did they suspend zeros in the question? Are we putting in thousand?
No.
They did not suspend, but we can suspend our own.
No, you can suspend actually, but let's just do it the way it is. So which year are we starting?
2022.
Go to your allocation table. Which year do you have access? Which year do we have access? Go to your allocation table.
2022.
That's where you start now. 2022. Okay. The old asset will be 2020, will be the current year. So it's 2022. So start 2022. Year of assessment. Then what do we do next?
The cost.
cost.
Cost. When we say cost, which assets? Is it new or old?
For new assets.
So the new one, what was the first? The new building, what was the cost?
2.5 million.
2.5. So bring them in as cost. New furnace, what was the cost?
1,750.
And new motor vehicle.
9.5.
These are the three assets that are new that from the allocation table. These are the three. So that's what we brought in. So what do we do next?
Claim initial allowance.
Initial allowance.
Yes, you can finish new asset before you do old, but for example purpose, you know how to be very fast. When you bring in new assets, you bring in the old ones. Okay. So how do you bring old ones? You do task, you bring it at task value. Bring them in before we start computing.
Okay.
So you can actually finish computing for new one, then do old. But it will take more time. So for the old assets, we have their figures here. There are 4 of them. So what's the task sitting down value for what's the first old asset and the task sitting down value?
Building.
What's task sitting down value?
2,318,600.
So bring it in at task sitting down value. What's the next old assets?
Motor vehicle.
Okay. What's the task sitting down value?
6,476,000.
What's the next old assets?
F and F.
Okay. Task sitting down value.
1,385,600.
385,600.
Generator. 3,789,000.
1,000. So these are all the old assets. So we have brought both the new one at cost and old ones at task number. So we can now do initial allowance. Initial allowance for which one?
15% of cost.
For which one? For new or be for old?
Building.
For the building, for the
Huh?
new building.
For the new one. So initial allowance for the. So what's 15% of the cost? That is, we are doing this times this. What's the answer? Please use your
375,000.
calculator. 375,000. Okay, do same for the new furniture. 25% of 1750.
437,500.
437.
500.
Do same for motor vehicle.
4.750.
4,750. So there's no new generator. So what's the total in initial allowance now? Can you total the initial allowance?
5562.
5562.
500.
Is it 500? Okay.
Yes, sir.
5562 500.
Yes.
Okay, so we are done with initial allowance on the new. We do old. Annual allowance now for which one? Annual allowance for which one?
For the old
For
asset.
the old
For both the
assets.
new and the old. For the new and
Yes.
the old.
But we'll start from new first.
So new, how do we do annual allowance for new? How do we do annual allowance for new?
You do another workings.
Just use your calculator. So tell me the formula. How do we do? Which formula are we using? Annual allowance for new assets.
Cost minus initial allowance divided by number of
Yes.
assets.
So the number of years for building is 10. For furniture is 5. For motor vehicle is 4. For gen is 4. So cost minus initial allowance. That's what you're doing. So you're doing this minus this divided by n. So use your calculator. What do you have?
For building, that's 212,500.
Yes. I hope everybody got this.
Yes, sir.
Okay, do same for furniture, motor vehicle, and all that.
Furniture 262,500.
Okay. 262,500. Then motor vehicle.
Tambo.
1,187,500.
1,180,000.
7.
Is it 180 or
187.
180,500?
187.
Okay. So now total the annual allowance for new now. Total it.
One six six two five hundred.
1662.
662
That's fine.
500.
Yes. So we're done with initial allowance for new. Go to the old. The old now, it has a formula. We have already gotten it. So look at it here. So we'll just bring these figures. So for building is 289,825. Building is 289,825.
Yes, sir.
For
For building old, 2 million, sorry, 221.
which one?
Building 221 and 18.
No, you are not computing again. It's already here.
Okay, we just put it there.
Yeah, we have already done it already. You just to pick it from it.
Okay. Okay, 289,825. Okay.
Motor vehicle is 2158667. Motor vehicle 2158667. Then furniture is 346,400. Then generator is 126,3000.
Yes, sir.
So what's the total? Can you total it now? Total the annual allowance for old.
Four million 57,890.
4 million. 4 million
Four
what?
million 57,000.
57.
Yes, sir. 892.
Oh, someone is there to confirm all these things. So that is all.
Just carry on. Just carry on.
There's no investment allowance anywhere here. You should just carry on. There's no more investment allowance.
Why?
Because this generator is old and old asset. So that's all for this year. So give
But
me
sir, we
the
have,
capital allowance. What should be here?
sir,
Yes.
but we have new annual allowance, sir.
New.
I'm talking about the investment
New for
allowance.
which one?
We have annual allowance new. So does that mean that it is not applicable to them? for the investment allowance?
There is no, investment allowance is on plant machinery equipment and generator. So for the new asset, there is no generator.
Okay, yes.
The only generator we have is old assets, and it means they have claimed it before.
All right, sir.
So give me the total of the capital allowance.
$11,282,000.
11,000,000. 892.
800.
So this is the capital allowance this company will claim in 2022. So if you want to show subsequent years, now give me the tax number of 20. This will be 2023 tax value. So let's get the figure. Let's use building as a sample. So you need to now, what you need to do is you add the cost and tax value, then less initial allowance and the two annual allowance. So what should be here?
We have 3 million for building.
3 million.
941,000. 275.
For furnitures and fittings, you have 211,308.
Lecturer is offline.
It seems can anybody help us to confirm? Maybe Mr. Shidi is still coming.
Okay, let me call him.
Okay.
Hello, sir. Yes, sir. Yes, sir. I don't know. You went out of the class. Okay, he said his laptop went off, but he's trying to get back into the class and conclude. So let's just give him a few more minutes.
Thank you.
Thank you, bros.
Okay, can you all hear me, please?
Yes, we can hear you, sir. Welcome
Sorry,
back.
my laptop just went off. That's the reason.
Sorry for that, sir.
Yeah, although I'm already concluding. So you were giving me the last that figure. So 3 million watts.
75 for building.
3 million.
941,275.
Okay, 3,941,275.
275.
Okay. So what I want to show you is that although we are done for the year under review, this is the capital allowance to be claimed in 2022. This is the year under review. But if you are doing for other years, subsequent years, then how will it be? This tax sitting down value is for the from 2023,000 dollars. So how will the capital allowance for 2023 be? For 2023 for this asset, there's no new asset, it's only annual allowance we're doing. So the annual allowance will now be the annual allowance for these two annual allowance for new plus annual allowance for old. So that's just what you need to take there. The one for new and the one for old. So if you like, you can sum them up and deduct, or you can treat them separately. So if we are summing them up, this will be 4 or 5. Can you add these two?
Yes, sir.
So what do we have?
We have
You have what?
502,325, the two annual allowance.
Yes, 502,325. So this is what you are deducting. So deduct this. That will be the annual allowance for building. So when you deduct, you have your taxing down value for 2024. So this is what you do for furniture, for motor vehicle, generator to get the total capital allowance. So this is just what I want to show you before then went off.
Yeah.
I hope it's clear.
Yes, sir.
Okay. So please, any question on capital allowance?
Very clear, sir.
Any question? Anybody with question on capital allowance? Because we are done with this. Any question?
No question, sir. You can continue, sir.
I hope others are still in this class.
They
Abdul
should. Yeah.
Latif, Zainab, Aigbe,
Yes.
Ijoma, Sulia,
Yes.
Samson. Okay, I hope you are. Any question?
No, sir.
No.
Okay. So if there is no question, we are done with capital allowance. And we have come to the end of today's class. So you have to prepare for the second quiz. We are done with the first quiz. So the next thing is the second quiz. The second quiz will be on what we have done up to capital allowance. So capital allowance will be maintained on the second quiz. And that will be
No problem,
that should be
sir.
after next week. So the upper week.
No problem, sir.
All right. So in the absence of any question, let's call it a day today. So hopefully that everything, all the tension will be doused and everything will go as that we'll be able to hold our physical class. But I think the protest is reducing, right?
We hope so, sir. People by Monday they should be tired.
But today, like today, I went to town. I didn't see any protest. Yeah.
People are hungry, so they don't go out, go shop corn.
Their momentum. Their momentum has gone
All
down.
right. Thank you. I've gone
Thank you,
down.
sir. Thank you, sir.
Thank
All
you.
right. Thank you very much. Thank you.
Thank you, sir.
Yeah. Thank you very much. Yeah.
Thank you, sir.
Thank you.
Mhm.